Good afternoon. Welcome to Options Tender. It is Thursday, January 18th, 2024. Welcome, everybody. We're going to go around the horn on SPY, QQQ, the VIX. Check out IWM. Then we're going to put together a story. We have another headwind, a possible headwind on the market that's going to possibly affect it and play our scenario that's very bearish. I don't know when that's going to take effect. We are losing a little steam today, but I still think we're in this chop zone. I think we're going to chop and grind to the upside until possibly next week or the week after with the January 31st FOMC meeting. So what are we going to do? We're going to do the individual ETFs that I was talking about. You can see here that the dollar and rates, 10-year rates, still have some strength. So that's putting a headwind on the market, also on Bitcoin. But what the new item is going to be gas. Excuse me, not gas, but oil. This is the oil futures. We're going to take a look at oil futures at the end, so make sure you stick around. We're going to do a top to bottom analysis and show you why we think oil may be a headwind on the market. Now, we'll also kind of compare that to Tesla. We think oil's bottoming, and we think Tesla might have a bottom coming here pretty soon. So with those both said, is there any correlation between the two? I think in the short term, with oil rising, that Tesla might actually have a nice bounce with it. But in the long run, I think it'll be just a lower high, and we'll get some lower prices for Tesla as well. So if you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. Thank you for all the likes, everybody. Thank you for the support. Let's keep this channel growing. Let's go. We have SPY on the daily time frame, this rising wedge here. Are we done right up top? It's possible. We had a reversal candle, a red hollow reversal candle. We did get a gap up. We're starting to form kind of the midday here, a doji. So this possibly could be another just chop. We could get back down for all we know. We're fighting with the 8 EMA and the 20 simple moving average, and they're colliding. They come together. We're basically just moving sideways in time. So price is going to be getting really tight here, and we're going to be looking for some breakthrough either to the upside or to the downside. If we get that grind into the FOMC, make new highs, possibly all-time highs, that's kind of where we're leaning at this point. I think that's what the market's trying to tell us, but we'll know a lot more if we start to break below, especially this low right here, the 470, and then ultimately the low of the 466 area. So keeping an eye on, we'll go to IWM. Without the participation of IWM, I'm not sure that we can reach these all-time highs. The Qs made another divergent high. So let's go ahead and let's look at our reversal. See, we're trying to make a higher low here. Had the negative divergence. I'm not going to spend too much time on these because we've put those out on many videos before, and you can check out those videos if you'd like. But, you know, we're trying to curl up. We're trying to grind to get higher prices here, but all it's going to do is make more negative divergent highs. If it even does reach up there. So we'll be looking to short. We already have our long-term short positions, but we're looking to hedge on the upside. And so that's why we're using Tesla and IWM. And we also have calls on some of the oil stocks now. And if you want to see some of these trade alerts, we put them out on the Discord. It's a free Discord. Check it out in the description. And let's go over to QQQ. On the Qs, well over the 8 EMA, crossing back over here. We do have a doji. We made a slight new high by a few pennies, and it's a divergent high. But now we have a 3-wave move up here. The only thing that these scenarios could kind of point out is that we have an A, this could be a three-wave move for a B, and then we get a much larger correction before going higher. But I think this, I think we're gonna kind of grind higher at this point. I'm going to put a new trend line here. If we break that trend line, then I think the other scenarios are possible, that this is the top, and or we just get a larger correction before heading higher. With all the divergence that's playing, if we start breaking trend lines, I do think we're going to we have the probability of going much slower, and that this being the top. Now, how can this be the top? You can't have a three-wave top. Okay, we have to. Pretty sure we're gonna do something like this: a 1, 2. We're topping at a 3 and just eke out a 4 and a 5. That would be more my guess. And this wave 3 just can't be the shortest. So however this works out, wave 3 cannot be the shortest. So we'll go on the lower time frames and just kind of work this out a little bit better. The important thing I'm talking about today is going to coincide with IWM and oil and such. So looking on the daily time frame, and I noticed on one of my other charts, I actually have this pivot connected here from the all-time highs, just that a little bit, and that was another point where we could say support is, where we have support off the pivot. Now we have a weekday here and IWM, but we do have our hollow doji, or some sort of not spinning top, some sort of reversal candle possible. It doesn't matter what that's called, at the 50, and that confluence of the falling pivot. Now at this point, it does look like a three-wave move, but you can go at the lower time frames and consider this an impulsive mode. So at this point, being that the 20 simple moving average is curling over, we're underneath the 8. I do think we're oversold. We start looking at some of our indicators. We have the Williams hour percent. We have bullish divergence. We're also way oversold on the RSI. And we're getting to that point at the 0 line on the MACD, where a lot of times you make at least a bounce at this point. And that's what we're looking for. We're looking to hedge some of our positions to the upside, or our downside positions. We're looking to hedge with IWM. So far, it's really not working. But we're looking for this one to at least get some sort of bounce, more than the bounce that it had today with the gap up, gap and crap. I think we'll see this kind of inverse head and shoulder, some sort of action. We'll look at it on the lower time frame. All right. Now, going over to VIX, we're just putting together our story. We're getting the things that we're talking about are playing out. So we had our reversal and a gap down off of the 15 area, and we just about closed the gap here. Did slight gap open for this initial gap up. So we closed the island gap that we had, and now we have another gap below. Do we actually close that? I'm not sure. We talked about this coming back down and closing this gap, but we do have another one that's possible. If the market's going to go up at all and get those all-time highs or just a higher bounce, the VIX is going to have to come down. So I'll show you that on a lower time frame in just a little bit. So let's let's go ahead and go backwards on the 65 and just kind of finish these off so we can move over to the oil play. Now, we had this impulsive move up. We're starting to correct, and we closed a lot of this gap here, and we're actually underneath that 8 EMA. We're just getting a bounce. I do think this might be more of a zigzag. So I think just like yesterday's video, I think we're going to test the breakout zone. I think that'd be more appropriate. If we close these, we had a day here too. So there's actually 2 gaps and 3 small gap. There's more gaps below. I'm going to start putting on a little bit more put protection, or more of our put swings, down towards this 14 to 1380 area where our breakout was. Okay, so we'll see what happens. We could go straight up from here, but really we just have a move down, and usually it's a little bit more complex than that. So I do think it's going to be more of a zigzag where we get our bounce here and one more low. All right, and if we go lower, we'll still be hedging on the upside for the market. Going backwards, IWM. Now we're looking for the IWM to have just a little bit of strength, just enough to get a bounce. So if we're on that pivot that I was talking about, we're also on that standard deviation move from the point of control, and we have this nice support slash resistance zone here. So you see how it's an actual zone. You have the resistance right where this dash line is. That's kind of where we came down to. So consider this a large zone here. And what I think we're doing is having an ABC up for a larger A B. The B can come all the way down to the bottom, and consider this a flat pattern. And then our C will be our corrective move. Do we get past the wedge top? Not sure. We could correct all the way to 50-60% area, which would take us out to this 196 to this gap area around 200 as well. So we'll be looking out for this. This also could be considered a 1-2-1-2 if we want to get some sort of zigzag. That's going to take time to play out. So we'll have to keep that in mind. But as of right now, this is an A, B, and we'll consider that because we have a three-wave move here. It's either a 1-2-1-2 or a three-wave move up. And this could be done technically. We can make a new divergent low, but I think we're at good support. I think we have our plays here. This is all playing out. This is a wave 4 into a 5. We have 1, 2, 3, 4, 5 wave move down. And now with all the divergences, the positive divergences, MACD is trying to make a cross right now. I think this is what we're looking for a little bit more upside on IWM. We did close the gap here. We can get rid of that. If you want to look at the bigger picture Elliott waves that we're talking about, then you can look at, I'll post those videos up above, but this is all a storyline, you guys. So all of these videos that I make are just putting more information together and kind of gathering what's going to happen coming up. Now, we did have a triangle form here, and we broke out from that triangle. Now we're back testing. So that possibly could hold, or we could fill some of the gap here. But I do think this is a possible three-wave move up for a 1, three-wave move down for a 2, and a smaller three-wave for a 3. Somehow get a either sideways or corrective move for a 4, and then eke out one more last high for a 5. So that's, I think the Qs are going to start to get weaker. I think some of the Apples, Amazon, Google, I think those are all going to be a lot more weak. And I think that Tesla might be the only thing holding the market up, as it does so many times. So with SPY, I kind of drew this channel in here. So this is a chop zone. In between this channel is just all chop sideways, and we had our rising wedge that we're back testing right now. So we do have some SPY protection on for tomorrow. We either make a lower high or we hit the bottom of the channel, and then I think start head higher. I do think we're going to make a higher low before heading up. I do think this is going to start playing out. Now this could be some sort of leading diagonal. And then we had our back test of the wedge, and this can continue lower. We will identify that as price breaks down. We have the 200 moving average down here as well. So as soon as we get out of this chop zone, we can actually confirm that that all of our bearish divergences are heading lower. We're heading lower on the higher time frames. Now on the lower time frames, we have to respect what's happening here. So we're already overbought on the Williams R%. So that's why I put on the SPY put protection for tomorrow and I believe also for Monday. But we're just now possibly getting a crossover. Maybe we correct a little bit and cross over on the MACD to make another bearish divergence, and we're rejecting off the 60 area, so we're not overbought on the RSI, but nothing goes straight up. So this is just a straight up move right now. Maybe we get a partial gap fill or fill up the gap. And let's go to the CL. This is the crude oil futures. We're going to go max on the monthly time frame. We'll shoot down here, and then we'll check out Tesla to see how that is looking for this possible bottoming. Okay, so we had inventories on crude today, and it's lifting the market just a little bit. We have these consolidation zones. We actually had huge moves and just kind of triangulating. I know this was a big, huge fake break where oil contracts actually went negative for a moment, but this is basically a triangle despite this poke through there bottom, and then we broke out of this consolidation and back testing. So looking in closer with the monthly, we have possibly a reversal doji. We're inside month here. We're right at that 200 monthly moving average. So basically it's just saying price has been consolidating and sideways. So on the monthly time frame, we're still right at that neutral area for the MACD. We're at the neutral area for the RSI, sideways movement. That's what it's saying on the monthly. But we're on the slow still, we're getting down to the oversold area already as we hold that breakout. And that will start to curl eventually. If that starts to curl, that will be a big tell on the higher time frames. Now, we're already getting that reversal heading bullish on the slow stoke, and we're getting out of the oversold area in the RSI, and we're looking to try to curl to the upside. We're curling, but we don't have a bullish crossover yet on the weekly because we've basically been moving sideways. All right, let's look at price action just a little bit. We have somewhat of it. You could draw this as an descending triangle. It does have a slight slope to it, so at this point it's just a triangle. And this could be just after this large move. This could be one move here, and this could either be a wave 4 or a B, where we have a 3-wave move down, 3-wave up. So that'd be A, B, C. And since we're moving sideways, could be a C, D, and E, to where we can have a continuation move here. So this could be just a triangle playing out. We have more room in the apex if it needs to. This could break out as a correction here, and then a 1-2 also. So if we break out, this move is done. The sideways move is done. If we reject from the top of this triangle top, then we have a little bit more room to consolidate. We'll be watching that. Let's go down to the daily. This is where things get real interesting. So we drew our triangle just a little bit different using the bottom of that that falling support or pivot from all-time highs, and then or from the highs. And then we had the doji here. We had the touch here. And we're reversing off it. So this is more of a little bit more of a symmetrical triangle at this point. And you see all the moving averages kind of coming together pretty much sideways after that huge move to the upside. And when you get a little bit lower, you zoom in a bit, we can start to see a possible inverse head and shoulder playing out. So if we draw the neckline, get some of those wicks in there. We're already breaking out technically. We do have one false break at this point, but we are breaking that major trend line where we have all of these points touching. So it's a good valid trend line. So we're at the 50-day moving average. So that's kind of slowing price right now, but we're starting to curl up on the 8 EMA, which is our trend indicator, which was sideways. So this should start rising, and then our 20 simple moving average. So we're pinched in between here for now. Let's see what happens. Nice big move. We had that bottoming doji here. Nice follow through. We'll see what happens next. We could back test first and then go higher, or we could just continue. Oil has a tendency to be pretty relentless and just have strong moves with a lot of wicks. A lot of wicks to fake you out, but it just those strong moves. So we are trying to curl back up, get a higher low on the slow stoke. RSI is getting stronger. We have a bullish move. We're in slight bear territory still. We're almost in the neutral zone, but the MACD has already made its bull cross and is heading to the upside. And this is very important for our trading, my trading, because the daily is the most important, because our swings, we need to see if we have headwinds and tailwinds from the higher time frames, but the daily time frames where we make our swings three days to a week or so, plus or minus. That's my time frame of trading. So that's why I look at the daily so important. We're making this breakout. Now I want to also show the volume profile. We're at this huge node right now, so we have a lot of price action that's happened in this area, and we're starting to break out from this area, and we're going to use it as a shelf, a volume shelf, possible launch pad. So we're right at it. We're lifting off of it. If this breakout plays through, we have plenty of room to start moving up to the 80 at first, and then maybe get a higher low, and then start heading much higher, much further. So we'll be keeping an eye on that. And then just lastly, we'll check out the 65, and then we'll just do a real quick comparison with Tesla. So we're getting tight in price action here. This has been a consolidation all the way from December. So if we start to break out from here, we start breaking the 75 zone, then I think this move is going to be pretty sharp and get up to that 80 area. You see these candle breakdown highs. That would be our zone to look for in the near time. And near term, I just mean like weeks to a couple months. This should be a strong breakout. It's been going sideways for a couple months now. Okay, taking a look at Tesla. Looking at Tesla, we have this massive area where we had support. Now, again, this is a zone, you guys. We're getting to that real oversold. We have divergences, positive divergences everywhere. This slow stoke is going to have to curl back up. We're getting the positive divergence, but it's going to have to curl back up before we have any significant move here. We thought we were going to hold support at this point. We have a 5-wave move down here, so we're probably playing out some sort of 1-2, 1-2, where we have a 4-5, 4-5, and this is what it looks like an ending diagonal right down here. So we might get to the options expected move at the 208. We do have some lotto calls into tomorrow for Tesla, and then we're in a swing calls for next week as well. Now, we want to do the comparison on the daily time frame, and we went through a little bit more of Tesla in yesterday's video, so you can kind of pay attention to that. We're not really we're kind of falling out of this pivot here. We only have 2 touches there, so it's not a very strong support, but ultimately we're still just in a consolidation zone. So I'm just put that out of the way for the second. We check our reversal. We're way oversold on the RSI and the Williams R percent. So that could be just say it's a condition. So we could be looking for some sort of reversal at some point. And the MACD is curling down. So from this analysis, if we do get our reversal here soon, it's just going to be, in our opinion, a lower high. So possibly just to retest this 230, 235 area. Now what I want to do is on the profile, or on the go under the studies, see if we can compare. Put a comparison on here, and I want to change that comparison to oil. And do the light sweet oil futures and apply that. And now we have our, let's go to a different, let's clean that up a bit. You know what? Let's get some of these moving averages off too. Let's have a nice clean chart. And so what we're seeing is the price comparisons. We can go even further back. When you see crude start lifting off, that eventually starts to trigger a downtrend in Tesla. So as crude gets lighter, you see Tesla gets weaker and weaker, and eventually, and it's all delayed reaction, just gets hammered. That nice high move there. And at the same time, we have crude starting to get lower, and that creates a bottom for Tesla, and you see the inverse relationship. I know that it's really close here to where you think they're going up at the same time, but if you really look at the peaks and what's happening, you're getting lower prices in oil, and that's an incentive for I might have said this wrong, you guys. So when oil gets higher, as oil goes high, we want a positive correlation. So we go along together. I know this is a story together, but we have the peak here. Although it peaked there, we stayed pretty strong in Tesla. With high oil prices, the public craves electric vehicles more. So as the price of crude lowers, kind of tanks with the electric vehicles as well. So we're riding up with it and riding down. So my whole point on what's happening with this analysis, it's not perfect, is that we're starting to get a lift in oil, and we're still heading down in Tesla. So do we think this might be a headwind, or excuse me, a tailwind for Tesla? As soon as crude prices start going a little higher, we should see a bottom pretty soon, and at least at minimum get a bounce here or more in Tesla. So we'll see what happens. I was just curious, just wanted to put it up here, and I don't mean to waste your time on it. I just want to see if there's a correlation. I never put those two things together. I had never done that, so just want to test it out and see what's happening. And it does look like there's somewhat of a correlation at periods of time. All right, so that's it, you guys. Thanks. Don't forget to like the video. Have a wonderful day. We will talk to you tomorrow.